Good evening and welcome to Money Matters. My name is Jim Butler with Videre Wealth Management. My co-host tonight is John Mason, a finance professional. Hi, John.
Hi, Jim. Nice to be with you tonight.
Good to be with you.
Thank you.
So, even though we don't like to time when this show will air, there's a topic that I'd like to start out with that is timely now and I think will continue to be for at least the foreseeable future. And it has to do with the state of the economy, slowness, how much more growth can we expect, and where's that inevitable recession lurking that keeps coming up on the headlines?
All really good questions, Jim. And it's surprising that this is the 11th year of this recovery. I mean, there would be no one back in 2008 or 9 that would have ever thought this. The other thing is, though, the annual compound rate of growth for this 10 years, 10 and a half years, has been 2.2%. Nobody would have ever imagined that the economy would grow that slowly during this whole particular time period.
Right.
So one of the real questions here is, in terms of how, is it going to continue or not, is what is the basis for what we just described in terms of what's happened. And I go back to the fact that Ben Bernanke, chairman of the Federal Reserve, at the start of the recession, wanted to build a recovery plan around the Fed creating a wealth effect that would stimulate consumption expenditures. And so his research when he was at Princeton University had, he's one of the world's experts on the Great Depression, not the Great Recession.
Right.
And Ben found that a lot of the economic activity was based on the wealth accumulated by the society. The primary wealth package is the stock market.
Right.
And so Bernanke started out with a policy that was specifically aimed at creating a wealth effect through monetary policy, and through that wealth effect then consumption expenditures would be expanded on a regular basis, and with consumption making up 70% of all real GDP, you've got then a real steady foundation on which to build the economic recovery.
Right.
And he's been right. I mean, this whole recovery is, I think, a testimony to Bernanke being spot on in terms of what he was doing and what he could accomplish.
So the cards he played or the cards he laid previously are panning out today, is what you're suggesting.
It has created the economy that we have today. And if you notice, I didn't bring in some of the other things like real investment expenditures and some things like that, which in the past has always been a really, really crucial thing for economists in terms of creating an expansionary environment.
Right.
Cutting interest rates so that businesses would invest in physical capital that would then stimulate jobs, which would stimulate income. But with that, as we've seen in the past, it generates
the up and down,
the ups and downs and things like this, whereas we've had this steady expansion through primarily consumption expenditures.
So certainly one of the other topics that we hear a lot about, and that is investors trying to guess what the Fed is going to do with short-term interest rates, and should they be lowering rates, should they be raising rates, and in what increments. And so Bernanke laid the groundwork in the past, and now we have a new Fed chair managing fiscal policy or monetary policy, and kind of after the fact. How do you think he's doing relative to what Bernanke started out with?
Well, I think Mr. Powell is doing a relatively good job. As you all know, we've had several. He's cut the federal funds rate
Right.
target 2 or 3 times now, and but he seems very very comfortable right now. He just testified in front of Congress today that said he's very comfortable in terms of where things are at the present time, and I think what that means is, okay, we made the adjustment in the interest rates, and now I think we need to sit a little while and see what the data present to us going forward, and whether or not that we need to change that. And I think that's been very prudent in the sense that he has responded, but he has not over-responded as people have done in the past, which tends to disrupt markets and cause greater swings. The new thing that Mr. Powell is bringing in, which if you go back and read his releases over the last year or so, is that foreign affairs, foreign markets are taking more and more, are appearing more and more in the Federal Reserve's justification for the policies that they're
So they're
pursuing.
getting more global in their perspective and putting more weight on that is what you're
Exactly.
suggesting.
And how is that important to us right now? Well, you've got the situation in Europe and with Germany. The data coming out about Germany, everybody seems to feel that Germany now is going to experience its second quarter of negative growth, which is the technical definition of a recession.
Right.
And with Germany being the leader over in that part of the world, that the likelihood that most of Europe will follow that way.
Right.
Then you've got Brexit taking place and the new vote that's coming up in the next month and the like. And so you've got a lot of international affairs that are affecting flows of funds throughout the world.
Right.
And Mr. Powell's got to live with that and move his tools in order to not only take care of what's going on in the United States, but also to be handle the disruptions or other things that might be coming from other countries because of where they're going, what they're going through with their
Right.
their economic conditions.
And certainly that's not going to change. I think the global marketplace that we've experienced over the past several years, John, as you mentioned, is just going to continue to expand.
Absolutely. Absolutely.
And things like Brexit is you know, a top headline grabber. Not to mention the trade negotiations that are ongoing, and I think that could very well be just the beginning of more negotiations going forward. If you just look at negotiations here in North America between Canada and Mexico, and then go international across the Atlantic, you know, to China and other major countries.
Yeah, it's just amazing. Again, the tariffs are a very, very big part of this too. But a lot of things, it's gotten more headlines over the last few months, and particularly in the last couple weeks. But the foreign flows of money into the United States from Europe and some other places within the world have been really remarkable in the sense that this is risk-averse money that is seeking what would be called a safe haven.
Right.
The United States is the primary safe haven in the world, and this has played a tremendous role in terms of what's been going on in financial markets in the United States. We've got all this money flowing in. Initially, it went into the bond markets because that was the safest. And you see that, for instance, the yield on the 10-year Treasury inflation-protected securities went down below zero again. Now, you know, we talk about negative interest rates, but you generally, tips are not brought into that discussion.
No, they're not.
In terms of negative interest rates.
Right.
But with all this foreign money flowing in, the tips rate for the 10-year and the 5-year went negative.
Right, right.
Indicating every time that's happened over the last 10 years, the tips rate going down like that has been because of international flows of funds coming into the United States. The interesting thing to me was that 2 weeks ago or so, that there was a change in attitude, a lot of it coming from the Chinese trade negotiations that became positive in terms of there's going to be a deal made. Guess what happened to that foreign money? And this was picked up by the Wall Street Journal and others and so forth. It switched from the bond market to the stock market. And so the current highs that this last week or two, as far as the historical highs the stock market has hit, seems to be because people have switched out of Treasury securities into stocks,
into equity markets. So
exactly.
let's take that thought process to our question, because I think that to some extent plays into that. So Grace Frank in Philadelphia is writing to us asking, excuse me, what bank stocks look good for a long-term investment with some yield? We were talking about that earlier, yes. But what shorter answer can we give her?
Well,
tonight?
I think the short term, there are some bank stocks that do provide a good yield and are performing well. And then what I mean by performing well is that they're earning returns on shareholders' equity in the 10 to 15% range.
Nothing wrong with that.
Which is quite good. My concern is it goes back to her question when she talks about for long-term investments, because I see just I'm a little bit negative on the banking industry itself in the longer term.
What's long term to you then?
5 to 7 years.
Okay.
And that has to do with the tremendous changes that are taking place technologically and otherwise in the banking industry itself. The banking industry continues to shrink. We're at, I believe, just under or right around 6,000 banks now. Used to be more than double that a few years ago.
But some would argue, John, that that's a good thing, meaning that when we had double that and more previously, that was too many. That was an excess.
And I'm not going to make a judgment on that.
Okay.
But your point is very well taken. But the thing is, it's happening.
Right.
You've got the 6 largest banks in the country, too, that own 2/3 of all the assets in the banking system.
Right.
So if you've got 6,000 banks, you've got 6 banks that own 2/3, and you've got 5,994 banks that hold only 1/3 of the banking system.
Okay.
Now you've got all the technology coming in. Now you've got the threat here of Bitcoin and some of these other currencies that are going to be coming in.
Right.
And wow, how stable can the banking industry be going forward with all these changes?
Well, and to put an exclamation point behind that, certainly politicians are having fun with that discussion, because there are some feel that banks should be broken up, and more than just politicians.
Mm-hmm.
But thank you for that answer. So it's kind of twofold. There's a short-term answer and then a long-term perspective that goes right along with that. So,
very, very definitely in this case.
Thank you, John. And if you have a question that you'd like us to address, please send it in, and we'll make sure to put it at the top of the list.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Welcome back. Our guest tonight is Bruce Korn of Zakback Promotions. And Bruce, we're glad to have you here.
Thanks for having me.
So I think we're going to learn some aspects of your business and the business promotion industry as well. before we get to that, can you tell us a little bit about your business, what got you it started, and just a little background on Zakback?
Well, Zakback Incorporated is a promotional products company that specializes in the use of promotional marketing pieces for advertising purposes, service award programs, safety programs, to help companies and other organizations get their brand exposure out there and also convey their message to a very targeted audience.
Okay. So how did you get into the business?
The show's not long enough to go over that.
As I mentioned to John earlier, short answer.
Like many people, it's a second career, and again, it just kind of found its way to me one time, and basically I was out of job for a while after working 15 years in the computer business. An opportunity approached, said, "Hey, I can make a business out of this," and the next thing you know, here we are 25 plus years later, and this is what I do for a living, and it's fun.
So what companies do you serve? And the second part of that question is, what companies use promotional products?
Well, first of all, virtually everyone out there utilizes promotional products, whether it be for advertising incentives, sales incentives, as I said, service awards, because you want to reward your employees for both good work and also for the longevity they work for a company. But it could also be fundraisers for small organizations. People see the stuff everywhere, but they don't necessarily know where it comes from. So companies like mine will talk to clients and we'll go over their needs, their desires, their message they want to get out, look at their brand, understand who they are, what they're trying to accomplish, and show them products that are going to get them the solutions they want to get to. That's the whole key. It's not the product that is so important, but it's the solution you're offering to them and how that message from that product resonates beyond the product itself.
Right, right. Does it matter where the company is in their life cycle, so to speak, when they will have a need for your service? Meaning, is it going to be directed more to a younger company or middle stage or mature company?
Virtually everyone out there. We are a $25 billion industry. People don't necessarily know just how big we are. Again, like I say, they see things out there and they see pens, they see mugs, they see magnets, and that's what they think there is. But there's so many other products that convey a message or a theme to an audience that goes well beyond those couple things that we mentioned. But whether it's a startup, whether it's a large organization or Fortune 500 or Fortune 100, everyone uses them, and when they're used properly, that's really the key. When they're used properly, they are very effective marketing tools.
Right.
How do you get customers, Bruce? Do the customers come to you, or do you advertise in order to bring the customers in?
So, the old term, everybody's got a guy, so to speak. In my world, primarily what we do is we do a lot of network, a lot of word of mouth. Obviously, we use promotional marketing pieces to get our word out there. But we can target our audience, which is really key in terms of doing anything with promotional marketing. You can give these items to the people specifically you want to give them to. So with us, it's maximizing our current client base. It's networking, it's word of mouth. We don't necessarily do any other kinds of advertising out there because we don't necessarily not believe in it, but we're not going to get the value back that we get from our own kind of marketing.
Are you limited geographically?
No.
Because, okay.
No, we and many of my competitors are going to have clients all over the world.
Wow.
Why most of our customers might be more local to the Philadelphia region. Some of our best clients are in North Carolina, Texas, New Jersey, New York, all over the country.
Wow.
In this day and age of the internet and everything else, that thing called the internet, you don't have to necessarily be in their backyard, although it is nice to go out and see people, though.
Right, right. Are there any trends in terms of the revenue that you're generating occurring in the industry and for you specifically?
Certainly, in this economy, it's difficult not to have an upswing in trends. The technology, certainly from a small company like ours, has allowed us to be more profitable, basically doing more, making more with less, so we can provide better services to our clients, but be more profitable ourselves as well. The trend in the industry, the economy is booming. People are spending money on getting their message out there. Certainly, companies are learning to take care of their employees more beyond a paycheck. So those avenues are growing besides just giving someone a pen to try and get them to buy from you.
Right.
You want to retain good people, you have to show them more than just their paycheck. Doing a service award program, giving them a plaque, a 5, 10, 20-year award, so to speak. Employees like that. They feel good about where they're working and they'll be more productive on their job.
Right. You had mentioned safety a few moments ago as far as one of the programs that you get involved with.
Mm-hmm.
Explain that.
Sure. Safety, you in a company, you make money to the bottom line in many ways. Obviously, one, you want to increase revenue, but two, you also want to decrease expenses. Right. So let's say you're working as a factory and you want to be accident-free as much as possible because
Sure.
that saves on the bottom line. By having a safety program, incenting your employees to follow safety guidelines very carefully, being extra careful on those things, having signage up, having, again, safety awards for them being compliant on their job,
Right.
can positively affect the bottom line by reducing your expenses on insurance, claims, and things like that.
Okay.
So that's the simplest way of mentioning a safety program.
Right, right. So will you bring that to their attention, meaning the client, or will they actually come to you and raise that topic and say, is there some way you can help us with this aspect because we're losing a lot of revenue or expenses
Sure.
over here?
Primarily, I put that on us.
Okay.
Meaning because people think of us for, quote, pens, mugs, and magnets. They think of people like us that will provide them a product and so on and so forth. But we actually offer a great deal more services than just that.
Right.
So if we're talking to a client, we might be talking to their marketing department. Well, HR or safety group might be a different department, so we have to ask the question, would you like to learn more about do you have a safety program in place? Would you like to learn more about them? Can I review your service award program? Oh, you don't have one? Can I tell you more about that? Because you'd be surprised how many companies of all sizes don't have award programs for the employees. Mm-hmm. And I cannot tell you and stress the importance of how important those kinds of programs are to retain good people, especially in this day and age where there's not a lot of jobs and the employment rate's pretty good.
Right, right.
Is the industry growing?
The industry is growing. I don't have the numbers specifically in terms of where they're at, except to say they're a $25 billion plus industry. But I would say just a few short years ago, I'd say maybe 5, 6 years ago, we were not even a $20 billion industry yet. So yes, it is growing. Yes, there are factors out there that can hamper growth. You didn't want to discuss tariffs, but they're out there. They're a fact of life. And we have to modify how we do things, modify client expectations. So far, we haven't seen a huge hit from the tariffs, particularly because so many things are made in China. But what I want to point out also regarding that, it's a very important fact, that 75% of the value proposition from a promotional product is domestic. Mm-hmm. So while the product may come from China, it is bought by companies here in the U.S., decorated by companies here in the U.S., okay, sold through people like me here in the U.S., sold to companies and organizations in the U.S., right, and then given to consumers and other people in the U.S. Right. So you have a very large percentage of the value proposition here right in this country.
Right here.
Well, now it seems like there's very little, the barriers to entry seem to be relatively low. Is it attracting more and more entrants into the industry?
It is low. That sometimes is a problem because we want people to not just say, here's my catalog, call me when you find what you want. Mm-hmm. Now, that happens, and that's okay. That's what online stuff is for as well, glorified mail order, if you will. But we do want to get younger. Many people in this industry are in a second career, and there's more than jobs than just what I do, selling and working with end buyers. Mm-hmm. There's logistical jobs, there's warehousing jobs, there's other jobs in manufacturing, and we want to become younger. So in my line of work, there is no requirement except to have a resale number. And then it's up to us to make the client know that we're worthy of doing business with them. Certainly, we do a lot of outreach in our industry to college campuses to educate young people especially that this is an industry and a viable industry and a profitable industry.
Bruce, are there a couple items here, one or two maybe, that you want to draw attention to?
Yeah, very quickly, when I say that we're pens, mugs, and magnets, obviously you've got pens, mugs. I didn't bring a magnet, but you all know what they are. But I won't say those things may be cringe. They have their place, and it depends upon, again, what that client is looking to accomplish with their promotion.
Sure.
What we do have in the industry frequently are trends.
Okay.
And categories. Calendars are a category. Drinkware, such as things like this, which was developed for a fundraiser for a local synagogue. Technology. Obviously, technology is everywhere, so naturally it's going to be in our industry as well. Something very popular is Bluetooth speakers, and we have all kinds of Bluetooth speakers. Audio, look at the popularity of Bluetooth AirPods, for example.
Amazing.
They're everywhere, but there's still a lot of room for creativity, and I point this out, and I apologize, I've had this for a while. Quickly, a client wanted to attract their consultants, external consultants, to qualify for the trip to Bahama, or I think this case was Puerto Rico, if I'm not mistaken. And they wanted to do something to carry out the theme, which was a coquille and a smile. A coquille is a Puerto Rican tree frog. So a lot of gambling down there, so cards, sets were one thing, but to attract people to it, to get them inspired initially, was a card explaining everything and the sound of a coquille inside making the noise. This isn't something you're going to find in a catalog.
No.
It's something that is created by professionals in our industry.
Right.
And it's just a matter of the ideas that we can come up with to generate that message and get it off to that client's
So
audience.
it almost sounds like we as humans are our own limiting factor as far as how creative we can be, or you can be, in helping to deliver a message.
We have noticed a trend, again, that everyone's so busy, it seems like, that they don't have time for the creativity. We used to have a lot of time to be very, very creative. Things like this it's actually a T-shirt in here, compressed into the shape of an ultrasound machine. Again, but people just don't seem to want to take that time. But as we move forward in this, I want to point out one particular item that not just is creative, but promotional products don't just
Quickly, we're winding
don't
down.
just make money. This is done for hospitals, for young moms and dads to tell parents how their firstborn child or child should be sleeping. This can save lives, not just dollars and bottom line things, but this can actually save lives. And that's really the message that promotional products can make. It can do a lot more than just make money. It can save money, and it can save lives.
Great. Thank you.
Pleasure.
Appreciate that insight.
Thank you.
And thank you for watching. Hopefully you picked up a few pieces of information and also insight into the marketplace. Be sure to tune in next time. Our guest will be Tony Frick, who's the President and CEO of Global Fit, which is a wellness solutions company for both employers and insurers. So again, thank you for listening to the program tonight.